Start formally here. Welcome everybody to this evening's event. My name is Don Kaufman. You're going to be joining me for about the next hour and 15 minutes. We should get through this. Vital skills for traders and investors. Again, a few formalities. Everything is being recorded this evening and this PowerPoint is available. Now, risk disclosure. We are not financial advisors or a broker-dealer. The reason I throw up the risk disclosure is simply because for the previous 15 years of my career, I worked in the brokerage industry. So a little bit about me. First of all, there's a lot of people that have no idea what is a Don Kaufman, what is a TheoTrade. So quickly up to speed over here. So again, my name is Don Kaufman. I'm co-founder here of TheoTrade. I got my trading career started in Chicago. So 3 weeks out of college, literally at 22 years old, 3 weeks out of college. I didn't study anything around finance, nothing of the kind. I was thinking about going into medical school, and I did a degree in molecular genetics, which, what do you do with that? You want fries with that? Anyway, I moved forward into the trading arena because family members were traders in Chicago. And I was interested in it, so I started clerking. Very short time after that, I traded for a while as a risk manager. They moved me upstairs. And about 18 months thereafter, I was invited to what at the time was like a no-name startup firm. And that firm was called thinkorswim. Many of you may or may not know thinkorswim. It's okay. So I do have 16 years of thinkorswim platform experience. I was very, very early on at thinkorswim. I went through a number of the acquisitions through thinkorswim. I eventually ended up running, and I'm sure everybody's heard of this, I ran the education division of TD Ameritrade for 5 years. So thinkorswim, again, since the onset, 5 years at TD Ameritrade and their 7 million clients. And a lot of the discussion we'll have tonight comes from some of the experiences that I've had in the brokerage industry. Just to be clear, the entire time in the brokerage industry, okay, I wasn't just an educator, I trade. In fact, at the early years of thinkorswim, we, the people that, ran and worked at thinkorswim every day, we were our own biggest clients. And that's, it's an important portion of this. There's no restrictions, in the trading arena, if you will, and the brokerage arena of trading your own account. And I did. So I love to throw this up over here, a CNBC shot. And what a day to throw this up here. So I was the short seller. So it was Don versus Mr. Wonderful. You can't be pitted against somebody else. In trading, and trading in general, trading, investing, whatever it may be, the game, it's not about, really winning or losing. It's about profitability in the long run. But when you're up against Mr. Wonderful over here, you got to take shots when you can. And I tried to go after him on this CNBC interview, but instead the guy ended up agreeing with me. It was painful with that. I've been out of the brokerage industry now for 18 months. And enjoying it. So we still work very, very closely with a number of major broker dealers. With that, all the formalities are out of the way. We're 4 minutes into this. Let's get rolling. Okay, we're going to roll right into different skills tonight. So again, tonight's called Vital Skills. I mean, really what we're going to cover is, number one, are you involved in the markets? By the way, these are not rhetorical questions. Jump in here anytime. So, by the way, I was also, somebody just said in the chat room, I was also a short seller of Apple today. It was a couple of eyebrow raising moments after the close today, but I was short into the Apple move today. If you watched the video from yesterday, we do some videos every evening. I was in a bearish position in Apple coming into the earnings. Didn't know anything, but the probable move. So we'll start with this, okay? Are you involved in the markets? And again, they're not rhetorical questions. Seriously, I suggest strongly that you respond a little bit in here because we're trying to help you out as much as possibly can. So then I say you need these skills. But really, we're going to start with some what I would call essential skills for all markets. So again, tonight, we're just going to uncover 3 skills you really can't live without. So the one thing I want you to know, whether you are a passive investor, some people don't like that terminology, buy and hold, okay? We're actually going to learn tonight a little bit about time, which I'll discuss here, that even passive investment, you still have to discuss 3 key skills, because these 3 skills, they transcend, okay, all market conditions, and they transcend all investment and or trading strategies. And sometimes when I say like trader, people think of this just insane person, hopped up on caffeine behind a ton of computer monitors. And frankly, that couldn't be further from the truth. The average individual that is actively trading, they're sitting in front of a laptop, they're on their tablet. Most people are, they'll enter in a variety of different ways, and it's okay. So again, these are going to be 3 skills that really transcend market conditions out there. We're going to talk about time, trade logic, and strategy. And I think you're going to find this quite interesting about why we're going to focus predominantly on these 3 skills. So building your market skill set. So let's start this evening by defining what you are in terms of time. It's a pretty good place, right? So what are you in terms of time? What do you consider yourself? Like, are you an investor? Are you a trader? Let's define investor. Okay, that's somebody that goes out there, buy and hold. Again, nothing wrong with it. And the reason I say nothing wrong with it, because so many of us have like a 401k, an IRA, much more passive investments. And frankly, we don't think very much about those on a day-to-day basis, but you should, right? It's your capital. And next we come down to the trader. What's a trader? That's somebody that's a little bit more intricate, maybe involved in some option strategies. Okay? Then we come down to the intraday trader. What's an intraday trader over there? Well, that's somebody that's trading in and out multiple times in the same day. All right? We call it an intraday trader. Now, here's the part. You don't have to define yourself as one of these. Somebody already came in here and said, oh, I am both. Well, frankly speaking, I'm all 3. I'm an investor. I hold all kinds of positions. In fact, if you went back to the Apple position, originally when they pitted me against Mr. Wonderful himself, when they pitted me against him, he was long Apple for the long term, and I was short Apple. Like I really felt at that particular time, this is about a year ago, that Apple had topped out. By the way, it was when Apple was trading right around 130, which was very close to the top, but that's neither here nor there. So I'm an investor. I do some trading strategies. One of those we're going to talk about tonight. I also trade on an intraday basis, but it's because I have time. I mean, listen, I spend 6-7 hours a day in front of my computer, and that's not easily available to everybody. But there's an extremely important reason why you want to define what you are over here. So we're going to hop right into skill number 1. Again, when I do a presentation like this, and we're eating up some of your time, reading up my time, I want to make sure that you leave with something that you can use here, now. Not tomorrow, not a week from now, not like a skill that you're going to acquire over time. You need to be able to use these skills immediately to make this worth your time. I don't want to lead you guys on to a bunch of ridiculous skills over here. Skill number 1 is define the time. This is what I call where traders become investors. And this is one of the easiest skills to interpret. Okay? Skill number 1, define the time. When do traders become investors? Some of us partake in a multitude of investments and or trades, but it's critical to define what we are in each unique case. So I started tonight by trying to get you to define that. Why? Like, why do I spend more than 2 minutes even talking about, are you a trader, are you an investor? For this reason. It's a bad trade turned into a worse investment. Before I go any further, I want you guys to recognize, all right, the buck stops here. When I say the buck stops here, I mean realize what I did prior to TheoTrade. All that I did prior to TheoTrade, okay, was I ran the education for what is now the single largest retail brokerage firm on the planet. And having that position affords you the ability to look literally at hundreds of thousands of active traders. I know what people do right and what they do wrong. And this, when I was thinking about putting this together in terms of this or transcending skill set, this big overlay of a skill set that transcends no matter what you are, I kept thinking about bad trade turned into a worse investment. And well, have you ever put yourself into a short duration trade only for the quote unquote trade to become an investment? Come on, people. You know what I'm talking about. Something you bought for a short-term pop, which turned into a long-term drop. Maybe you were listening to Kramer on CNBC. A short-term pop turned to a long-term drop. I have a fun one for you. You can look this up. If you've ever watched CNBC and Kramer, okay, the creator and original producer of his show was also the original creator and producer and won a TV Emmy for what show? It's the ultimate trivia question tonight. Granted, again, I've done some CNBC, so I know a lot of the people there over the years. The original creator of the Jim Cramer Show, okay, was also the producer and creator of what very famous Emmy-winning talk show? Nobody's getting this one. The Jerry Springer Show. That should, make you think a little bit sometimes about what you're watching in terms of entertainment versus skill. The next time he throws the chair on there, think about that one. It's a fun skill. Anyway, if you take a look at this, something about for a short-term pop that turned into a long-term drop, and everybody's done this. Go take a look at your portfolio and tell me you don't have a trade turned into an investment. Think about it. How many of you guys actually have that? Something you bought for the short term was a trade turned into an investment. Time is a skill you will not and cannot live without. So one of the easiest things to start the evening off here, and again, it's a pretty simple skill, right? One of the easiest things to start with is just the idea, okay? The first definitive stride to a more effective skill set, define your time frame for each unique position you intend to take. What this means is a trade for one day, you close it in one day, right? Think about this. Define your time, a duration investment. Those are long or short investments or bonds. Expected time to maturity is over 3 months. All right? Think about this again. So few people, like 6 or 7 people. We have hundreds and hundreds of people tuned in right now, but only 6 or 7 people were willing to admit that they did this. Come on, people, admitting it's the first step today, right? Take a look at your portfolio and tell me, everybody has some piece of junk that you bought. It wasn't a piece of junk when you bought it, okay, but it is now. And, listen, I've watched this stuff for 15 years. People do the exact same thing again and again and again and again. Duration investment. It's long or short investments. Again, maturity is over 3 months. You're going to define this. Mid-duration trades. These are swing trades. What does that really mean? It's stuff that you're in and out of, but it only lasts, okay? The absolute maturity is 3 months. After that, you got to pull the trigger and get out. We're going to talk about mid-duration a little bit. And then intraday trading. That's an active intraday trades entered and exited in the trade in the exact same trading session. And again, why do we define this? Because basic skills pay huge dividends. Sounds easy enough, right? And it does sound easy enough. Hey, you must define your time frame for every position you encounter. I say it almost jokingly, but why was something this easy? Has it cost traders, investors alike? I mean, to say it's cost thousands is a joke. It's cost tens of millions, right? You watch 7 million clients do the exact same thing again and again and again and again. I'll give you a perfect example. People took a shot on Apple today. Well, other tech stocks had pretty good earnings. You took a shot on Apple, and what happened? Apple initially, right after the earnings popped up, then dropped hard. And now what people are likely to do is to hold that position. Well, I was just going to do it for a night. Just one night. Just one night. Okay? And they don't. They'll hold that thing forever. And I got to tell you, having watched 15 years, you get to the point where it's like almost your breaking point. You're like, I can't look at this anymore. It's too painful. I mean, and answer honestly, with this first really simple skill, have it saved you money? And yeah, we spend like 10, 15 minutes on this, but it's so important. Would this have saved you money? Time and duration is a known weakness of traders and investors. Define your time. Nope, nobody. Nobody's willing to just type in over there and say, yes, it did. Okay, a couple of people here. Somebody's like, yes. All right, you'll get out of your NVIDIA. Oof, NVIDIA, that's a one-way ticket to the upside over there. All right, a couple of people took some bets in Apple. And again, listen, whatever mistakes that you've made in the marketplace, you have to be able to exploit your own weaknesses, because until you do, you're not going to get this business, all right? But think about that. Now, that's one of the first skills. So I started this evening, again, with a fairly straightforward skill. Most people have kind of figured this one out on your own, right? You could have figured it out on your own, but they still don't adhere to it. They don't stick to it. So again, realize for the last 15 years, all I do is educate and watch order flow for thinkorswim and TD Ameritrade clients. I have looked legitimately at hundreds of thousands of accounts, have studied accounts. So we don't actually go into every individual account. We go in there and we look at trading patterns and say, like, what did they do? What did they do wrong? Okay. We've exploited like literally hundreds of thousands of different accounts to learn where people go right and where they go wrong. Again, you've seen what works and what doesn't. What doesn't gets repeated over and over again. Now, allow me to step into, the next. And I'm going to tell you right now, we're going to start stepping it up a few notches. You guys okay with that? So, the first skill, define your time. Define what you are and never deviate. It's not that difficult, right? If I'm an intraday trader, it means I get in and out in the same day. If I'm an investor, that's okay. I can hold positions. But now we're going to step it up a few notches, and things are going to get a little bit more squirrely from here on out. Okay, skill number 2, trade logic. It's what I call the test of occurrences. So in skill number 2, this trade logic, the second skill for this evening, again, it's trade logic. What does that even mean? Like when I say, all right, what's your trade logic? You guys tell me. Okay? A brief pause here, a brief quiet. What does trade logic really mean to you? Think about it for a second. I'm saying that as I drink a little bit of caffeine. It's late for some caffeine, but it's okay. Like when I mention like trade logic, I get blank stares most of the time. And if you're an investor or a trader, you need to employ the right logic. All right? Logic, it can mean a lot of stuff. All right? I like this. Jerry actually came in here and said it's a reason to be in the trade. All right? Tony came in, expectation of win. That's actually really good. All right? Issues, entries, exits, trouble setting profit margins, perfect. All right? Why am I in the trade? I don't know. Every time you're in a losing trade, you're like, why am I in this position at all? Well, when it comes down to it, I'm gonna kick off trade logic with, I'm going to exploit an area that when I first got involved in this business, now I worked for a fairly prestigious individual in Chicago. He was this individual all about trade logic. That's all he ever talked about was gaming theory and trade logic. And this was one of the examples that was first brought up to a group of traders that included myself. So let's see what trade logic can do for you over the duration. For example, let's take a very simple and frequently used idea. Somebody goes out and they risk $1 to be able to make $2, right? So they risk $1 to be able to make $2. What do you do? All right. Part of the understanding of trade logic is recognizing whatever you're going to do in the markets, it must stand the test of time and 1,000 occurrences. So let's just put it in this scenario. All right. You go out into the marketplace and you want to be able to risk 1 to be able to make 2. So I'm just going to sketch this for you really quickly. So you risk 1 to be able to make 2. So how often are you right in the market? You guys tell me. Anybody? How often are you right in the market? Let's say that you're right 50-50. Now, if you're right 50-50, okay, so somebody, I like it. Somebody, I'm right 30% of the time. That's good stuff. So if you're right 50-50. Now, if you're right 50-50, every time you're right, you'd make $2. And every time you're wrong, you'd lose $1. That would work out pretty good, right? I got news for you. That doesn't work. It doesn't work. And I'm actually going to show you why. This gets a little bit confusing. I said, we're going to step it up a few notches. This is what we call good logic gone bad. Have you questioned what your probability of being stopped out of a trade might be? Probability of being stopped out of a trade can be calculated by using something called probability of touching. And you better be advised now, you're probably not going to look at investing or trading quite the same after this example. What is probability of touching? Okay. First of all, it's the probability, okay, of, it says an individual's option strike price being touched or surpassed any time between now and expiration. There is no directional bias, yada, yada, yada. Here's what probability of touching really is. Bear with me for a second, because here's an example. And I like to just kind of freehand stuff. This is a stock, and we'll call it stock, right? So that stock's name is stock. It's not Apple. Let's say it's a stock, and it's trading at $100. Now, what's the chance of the stock going to 105 versus what's the chance of the stock going to 95? Now, you guys tell me. Again, what's the probability that it goes up $5? What's the probability that it goes down $5? Now, frankly, there's not a 50-50 shot. There's a 50-50 shot that the stock could go up or down, but there's not necessarily a 50% chance it goes all the way to 105. Okay? Well, what we have is what's called probability of touching. And what probability of touching is, it's an equation. It has been used for decades and decades. Okay? It's nothing new. It just doesn't seem to infiltrate into what we term, well, traders and investors in the retail world. We're all retail clients now, including myself. So what probability of touching can do, it can say like, hey, you know what? There's a 60% chance of going to 95 versus there's a 60% chance of going to 105. Now that varies depending upon the stock. Why does it vary? You know, if you get a stock like Tesla, if you're not familiar with Tesla, what's the one word that describes this stock? Volatile! It's almost as volatile as the founder himself. I mean, Tesla's a volatile stock. But then you look at a stock like Walmart. Walmart is a little bit more mellow. So the probability of touching is going to be higher in Tesla than it is in something like Walmart. And that's one of the things with probability of touching. Now, again, it varies. So I'm not going to worry too much about like options, because I'm going to tell you right now, frankly, you do not have to be an options geek to get this stuff. You just got to know that there's probability of touching out there. Why do you have to know it? For this. The probability of touching and stops. You know, when people first get involved in markets, they always talk about use your stops, set your stops, and use your stops. Okay? Again, this is coming from somebody that had a tremendous amount of experience with clientele. I'm telling you, all right, you have to be incredibly careful using stops. Number one, if you purchase a stock at $60, you can set a stop order at 59. Now, let me ask you guys this. Are you guaranteed to get out at 59? You got to answer that question. If you set a stop order at 59, are you guaranteed to get out at 59? Anybody? The answer is absolutely not. Okay, without unequivocation, if the stock closes at 60 and the next day opens at 35, it happens. It's called a gap. All right, you get out at 35, becomes a marketable order. But let's say your stop is going to work. Now you set a stop at 59 and a target price of 62. What am I doing here? I mean, really, like, what am I doing? All I'm doing here is risking 1 to be able to make 2, right? Now I know I'm spending a little bit of time on this, but I just can't stress enough. Do you have any idea of the implications of this? Now, before we've hit anything about probability, okay, I want you to figure out logically what's going to happen first. Let's assume that, you know something about this stock. What do you know? Well, I think it's going to go up. Yes, but stocks don't always agree with what you think, because every time you think it's going to go up, there's somebody else on the other side of that trade praying it's going to go where? Down, So where does it go? Well, if this is a $60 stock and has normal volatility fluctuations, the longer the period of time, the more the stock can fluctuate, right? What happens first? Does that stock hit 59 or 62 without take all directional bias? Whatever you think, throw it out of the equation. It doesn't matter what you think. You can't put thought into the mathematics of the trade. Okay? What's the probability of hitting 59 before 62? Well, to hit 59, we only have to go down $1. To hit 62, we have to go up 2. So in a normal volatility fluctuation, the chances of us going down $1 are way higher than going up 2. Are we okay? Anybody? We okay? What's the probability in the next 29 days of being stopped out versus hitting your target price? Okay? And the answer is, well, this is actually a real example. I took this screenshot a while ago, but we're going to do another one here in a moment. This is Starbucks. This was a real trade. It's a real example. Starbucks is at $60 in the next 29 days. What I wanted you to see, the probability of going, all right, to 59. Look, the probability going to 59 is right. I'll fix this in a second. The probability going to 59 is right there. There's almost an 80% probability of going to 59 versus what's the probability of touching, okay, 62. See, there's 59 and there's 62. And the answer is about 56% of the time. Now, you're like, what does that mean for me? What does this mean for me? Okay, stop right there for a second. We're going to do another example, so if you're a little confused, okay. But what does it mean? Trading's about the number of occurrences. Pause for a moment and recognize the significance of the last example. If you do 100 trades with the aforementioned logic, you're positioned to be stopped out 79% of the time. When you approach trades and investments, it's vital to look for flaws within the trade logic itself. Everybody thinks about this stuff, but nobody actually explains it. This is the mathematics behind trading. There's no and or if about it. I don't care if you're going to be right 85, 90% of the time. You realize you're going to be stopped out 80% of the time. Why? Because you didn't even know about probability of touching. I don't want to pick on stop orders. I say stop is a 4-letter word. I don't want to pick on stop orders. If you know about probability of touching, you can, in fact, use a stop order effectively. Nevertheless, most people don't. Okay? True story here. I'm going to tell you just a quick story. I think that wraps into this nicely. Thinkorswim is, listen, I don't care if you guys are on Thinkorswim or not, but it is the preeminent trading application in the entire industry. There's really no argument on that one. It's pretty much the preeminent trading application in the industry. It's kind of confusing. Yeah. Forget all that. For the first 7 years of Thinkorswim, there were no stop orders available on that trading application. You want to know why? Because everyone that worked at Thinkorswim, we refused to put it on there because we knew this logic, right? We knew the exact logic of this. And again, somebody was asking, like, what are the indicators using on TOS? Forget about direction. I'm telling you right now, Forget about market direction. Don't tell me whether you're bullish or bearish, because I just don't care. It's not about being bullish or bearish. If you don't look at your trade logic first, it does not matter whether you are right or wrong in this business. You will lose money. That's the whole key. In fact, before I go to the next example, look at this. You ever been right and still lost money? Of course you have. Many traders have suffered the wrath of the stop order. You get stopped out only to see moments later the stop turn around, and that stock turned around the exact way you intended. Or maybe you bought a call option expecting the stock to go up. The stock did go up and you still lost money. Your trade logic and your approach, it's the single most essential skill we can impart upon you. In fact, if you look, and I'll pause for a second over here, because again, another critical area is this. If you ever looked at a major trading firm, some people read books and so forth about trading, but I'm going to give you the whole lowdown. You go to a trading firm. Do they have a bunch of traders with charts up in there? Absolutely. Of course they do. Everybody's looking at charts. Do they trade on what they think? Yes, but they trade first on the right trade logic. If their trade logic doesn't work, do you really think a firm with billions of dollars at risk is going to do something, okay, as simple as screw this up? Of course not. And I'm very, very literal with this, because I got to tell you, I have watched traders, investors alike go through this, and they just hammer themselves. They just keep shooting themselves in the foot. Reload the account, shoot yourself in the foot. And they don't realize one of the most simple skills is, who cares what direction is? Because direction is secondary. You have to figure out, are your trades logical? I mean, logic, it's my forte. It's a huge portion of what we do here at TheoTrade. If a trade idea or concept does not stand the test of 1,000 occurrences, then what's the point of doing it? Because I thought I could be right. Trade logic, the skill ties directly into the final skill for this evening. Before I go on, I'm going to take you to, this is the thinkorswim platform. I apologize. I'm in the most difficult tab. We're going to go to the trade tab, okay? And you guys tell me, you pick a stock, any stock you want, type it in right now, because I'm going to give you a similar example, okay? And no, you should not use trail stops, okay? So, all right, people are firing in right now. Come on. Biotech, interesting. Priceline, yucky. Not a fan of Priceline. The bid offer spreads are too wide. EWZ, oh, I trade that all the time, Dean. All right, I'll tell you what, the number one that's coming up over here, the USO, nice. Intuitive Surgical. All right, let me show you something really quick over here. You want me to save you some money? So I'm going to try to save you some money really quick. Intuitive Surgical, if you guys have never looked at it. Open up an option chain. The volatility in here is 18%. The bid offer spreads are $1 wide. I just want to show you something, because if you trade options in here, you're not going to like me saying this. Even if you're right, you will still lose money. Okay? I'm sorry, but if you trade options inside of Intuitive Surgical, over the long run, even if you're right, you still will lose money. And it has nothing to do with direction. The spreads in here are too wide. The bid offer spreads are too wide. You lose money if you continue to trade this. It's a $679 stock, right? The bid offer spreads, even when the market's open, because I know this product very well, they're close to $1 wide, right? Some of them are a little less than that. They're close to about $1 wide bid offer spread. What is that? What does that mean? It means here's a more liquid product. Now this is a $2,000 stock, $2,100 product. Even options with 3 days remaining to expiration, generally speaking, have better bid offer spreads than Intuitive Surgical. Hey, I'm not trying to pick on you, but I will show you how to exploit. Listen, I started on the other side of this business. All right? I know exactly how the servers work, every single detail of it. I know exactly how TD Ameritrade and thinkorswim will route your order. You think it's helpful? If I tell you that if you traded Intuitive Surgical 100 times, it doesn't matter if you're right, because in Intuitive Surgical, you give up 10% by the time you get in and get out. in the bid offer spreads and options, you give up 10%. How's that for a skill? All right. Again, people don't like me saying that. You're like, well, some guru showed me. I got to tell you again, the buck stops here. I don't care what somebody shows you. I'm going to tell you right now, when I say the buck stops here, all I did was watch order flow for 15 years. You know, you think this stuff is right. You got to recognize it just isn't. There's no good fills in a product like that. By the way, the number one stock that kept coming up, a lot of people put in Apple, but it just had earnings, so it's a little confusing. I'm going to use Microsoft because a lot of people came up with Microsoft, and guess what? It's sitting right at $61 even. And I just want to show you a quick and dirty example on Microsoft. So bear with me. Let's say you were going to hold a position. Let's go 31 days because it's exactly a month. Let's say you were going to go out there and you were going to buy a stock. Let's buy the physical stock, okay? We'll buy this physical stock right here at about 61 bucks. We'll set the stop order at 62. All right, that's your target price to the upside. So, you know, and what's the probability, for instance, of going down to 60? Now, that would risk $1 to be able to make $1. But frankly speaking, that's not what most people do. Okay, now I'm going to show you how this really works. We're going to come into options, theoreticals, and Greeks. Don't panic. There's a tool on here called probability of touching. Listen to me. If you do not have thinkorswim, don't panic. It doesn't matter. You actually have probability of touching on every trading application. You just don't know it. There's a way to use probability of touching with every single trading application. But for tonight, I'm going to make this really, really easy. What the average individual would do in this particular position is they would go out there and they would buy, okay, Microsoft at 61 bucks, right? They set the stop. Let's just set the stop $1 lower at 60. And then they set their target. Okay, they set that target at what? Well, 61, let's say plus 2. They set that target at 63. So what are you doing? You're risking 1 to be able to make 2. Does that sound reasonable? Okay, of course. That's what we were just showing a moment ago. So let's do it now. Let's take a look. How would this work out, mathematically speaking? So if you bought the stock right there at 61, look at what's termed the probability of touching. Right there. Okay, what is it? The probability of touching the 60 level, which that's where our stop is 75%. Now, you can't make this crap up. This is live. It is the market. And the market's even technically still moving after hours. But 75% probability of touching the 60 level. What's the probability of touching the what? The 63 level. You're going to love that. 35% chance. Now, do you think that's a 50-50 shot? No, it's telling you there's a 75% chance of getting stopped out before hitting your target price. Let me ask you a question. How often now do you have to be right in the market? How often do you have to be right? Because you can be right in this case, in a mathematical world, you can be right about 35% of the time in terms of hitting that target price before hitting your stop order. Now, maybe you think that you're going to be a little bit better than average. I'm going to be a little bit better than average. What does that mean? You're like, well, I'm going to be right more than I'm wrong. It still doesn't work. You're still going to hit the stop order considerably more than hitting your target price, which is what they call the slow bleed. And people look at this and they go, well, why doesn't everybody talk about this? Okay? Because this never really infiltrates the trading world. Again, TheoTrade, it's not about me. It's not about like Don Kaufman. It's not about me. TheoTrade, we've got Jeff Bierman. He worked with me at thinkorswim and TD Ameritrade for 7 years. He was our technical analysis, okay, kind of fundamental quantitative trader over there. He's really skilled guy. We have Doc Severson, okay, helps out with trade logic like this. We have Tony Rago. We actually have Steve Miller. For those who don't know Steve Miller, Slim Miller. Okay, Slim Miller, he's in his 60s, semi-retired out there. These are all traders, okay, on staff that work every single day with clientele. But we try to exploit areas exactly like this so you get just a better understanding of what's really going on in the marketplace. right? So again, the logic, it's our forte here. I mean, that's a huge amount of what we do. So if you think about just this very, very simple idea 1,000 times over, okay, it's a slow bleed. Okay. And Jeff actually was in the chat room here a moment ago pointing out, he's like, yeah, but if you're right, you make $2. Yeah, but the probability of you getting stopped out, the number of occurrences is going to crush your trading account well before you can be right enough times. But this, it ties beautifully. Okay. So this whole idea ties just beautifully into what we're going to do this evening. So what have you learned so far? Number one, you've learned I better define my time frame for trades. Number two, you've actually learned, well, maybe I should be very careful if I'm ever considering stop orders, because this does not look like a happy-go-lucky, event by getting stopped out 80% of the time. And again, I cannot stress to you enough how important that very simple skill is. And this ties into kind of our final skill. Now, again, we're stepping it up. Skill number 3, it's strategy. Who needs direction when you have strategy, right? Who needs direction when you have strategy? Listen, direction, it's important. As I told you guys earlier, I was bearish on Apple. But you know what? Before I go any further, I was bearish on Apple yesterday. I put the trade on today. Doesn't matter. I made money, but that doesn't matter. It doesn't matter because I could have very easily been wrong. But even if I was wrong, I was going to take a very, very finite amount of risk, a comfortable amount of risk. And I'm going to actually show you a little bit about that. So, skill number 3, strategy. Finally, the strategy you employ into the markets, it's absolutely vital. Strategy, it incorporates a multitude of different skills, everything from time frame to trade logic and capital allocation. So what's actually kind of cool about strategy is not so much a skill as it ties a multitude of skills together. So turn the tables with the right logic and the right strategy. In the previous example involving trade logic, we got stopped out of the trades early and frequently. Probability, well, turned out to be working against us, as we had a much higher chance of being stopped out, all right, of the trade prior to our position making money. So let's try to turn the tables a little bit out there. Okay, we're going to try to turn the tables. Now, we don't need no stinking stops. I say no to stops. And again, that's no joke. For the first, 7 years of thinkorswim, there were no stop orders in the trading application. Very few people know that because it was in 2007 that we actually added stops to the trading application. So most people they didn't know what a thinkorswim was, up until that point. Now, we're not going to use stops because I want to make you impervious to being stopped out. How about you had a trade that no matter how badly things turned out, you could only lose, let's say, $1. That's it. No matter how badly, let's say Apple crashed and burned, you cannot lose more than $1. And there will not be a stop order. And yes, we're going to use options over here. That's it. I said the O word. Don't shoot me. We're going to use an options strategy. You don't have to be an options geek for this. But nobody likes that idea. The most you can possibly lose is $1 if you're dead wrong. Right? Think about it. We're going to use what's called in-out spreads. In-out spreads, they're option spreads designed to limit your risks while allowing you enough time in a trade. Enough time for what? Enough time for anything, to make money. How about that? Have a trade that makes you impervious to risk, that you can hold through the most, adverse conditions. You're on fire. The market's going against you. I can't take it anymore. You're throwing up in the corner. You don't have to do any of that anymore. Listen, markets are all about right now duration over direction. You know what that means? You got to hold on to crap long enough so that you can make money on it. Because I'm going to tell you right now, you think this market's tough? It's going to get a lot tougher. I mean, this market is going to get a lot tougher than it currently is, and I'll talk about that. Now, you don't have to know much about options, but allow me to present the strategy. What I want you to do, if you've never had experience in options, just pick up the logic, all right, and see why the strategy is so viable. Do not let options intimidate your learning about how to effectively manage your risks. Because if you do that, I think you're missing the bigger picture. I'm not telling you have to trade options, but I want you to see the logic of this, and from there we'll move forward. So this is what we call setting up in-out spreads. So again, this was on Starbucks. I took the screenshot about a week ago, and I'll show you Starbucks again, but here's this screenshot about a week ago, and if you're curious right now, you're like, where's Starbucks? Where's Starbucks now? Okay, Starbucks happens to be trading at 53.67. That's where Starbucks is this second. This is a live trading application. Here, it was at 52.74. Now, what did I do? I used what's called an in-out spread. And it's just kind of a goofy name. We bought a 52 call. Now, if you have no idea what an option is, what does a 52 call give me the right to do? It gives me the right to buy the stock at 52. Do I have to buy the stock? No! But I have the right to buy the stock at 52. What did that right cost me? Well, for the next 39 days, that cost me, okay, about $1.85. That's what it's going to cost me. So I bought what's called a 52 call. And you can actually see it down below over here. Here is the 52 call. Now, simultaneously, we sell the 54 calls. So we buy the 52 calls. What are they trading for? About $1.85, right? Then we sell the 54 calls. You're like, wait a second, I never owned the 54 calls. You don't have to own them. You can sell something that you never ever owned. But you sold yourself into an obligation. You have the right to buy the stock at 52. Somebody else has the right to take stock from you at 54, right? If you have the right to buy the stock at 52, can you buy the stock at 52? Yes. But if somebody has the right to take stock from you at 54, can they take that stock at 54? Yes. But if they take the stock at 54 and you have the right to buy the stock at 52, you buy the stock at 52, they take it at 54, how much can you make? I know. You can make $2. You can make $2, $2. But this trade, okay, this trade, it only costs me $1 to get into. The trade costs me $1, but the most I can make is $1. Well, you can make $2 here, but you paid $1 for the thing. So what can you end up making? $1. So what are you really doing on here? All right, what are you really doing on here? By the way, I'm using the mid prices. So if you buy this and you sell this, you're basically paying $1 for it at mid price. What are you really doing over here? I'm going to tell you exactly what you're doing. In this particular trade, you're going to risk 1 to be able to make 1. Now, why would you ever want to do that? Don, you're out of your mind. Why do you want to risk 1 to be able to make 1? Oh, I have an answer. Because when you're wrong, you don't ever have to get out. Let's say the stock just crashes and burns. Oh, but still my heart. Who cares if it crashes and burns? What are you going to lose? $1. Your buck is gone. Yeah? Well, guess what? In the next 39 days, that stock could come right back up. You're never going to get stopped out. You cannot lose more than $1. It makes you impervious to the downside. You know, when you have these trades on, they go against you, you're like, oh, that's going to leave a mark. Let it leave a mark. It doesn't matter. Who cares? So what? It goes against you. You get them again next time. When you're right, what do you make? $1. But the difference is you don't get stopped out. So what does it do? It increases your probability of being able to make the $1. If you look at this mathematically speaking, if you become impervious to the risk, it leaves you in the trade long enough to be able to make your $1. You know what? After 15 years of watching people trade, I'm going to tell you one thing that's absolutely essential. You can't stay in trades long enough to be profitable. Think about one of the first things we talked about tonight. And what was it? I told you. People, they do the right, trades in terms of they pick direction well, but their strategy is terrible. And they meaning that, think about this. How many times have you guys been right and still lost money? because you couldn't either, number one, hold that thing long enough, you got stopped out, you bought a call, you did the wrong strategy, you had the wrong trade logic. You know how simple this thing is? And people, why didn't you show me this before? Because this isn't instant coffee and instant tea. You got to actually learn something here. You know, you got to realize when it comes to a simple strategy like this, you know, and if I harp on this, it's simply because, again, after, 15 years of watching this stuff, you get fed up. You literally get fed up with watching people. I mean, listen, the vast amount, okay, of people that invest and trade in the marketplace, do you realize what they are one bad day away from? Okay? You answer that question. People are one bad trading day away from what? Losing a ridiculous amount of their retirement account. Okay? You're one bad Apple announcement. You know, Apple came out after hours. What happens if Apple turned around and the earnings weren't very good. Apparently nobody wants our iPhone 7. You're only one bad announcement away from losing 10% of your life savings. And some people can't afford to lose 10% of their life savings on there. You know? I mean, we're trying to make sure that people get into positions that not just work for them, but when you're wrong, you don't get like ridiculously crushed. You know, there's a saying that one of my friends, Jeff, uses all the time. He goes, people don't get it. He goes, they're one trade or, one investment and one hiccup away from forget retirement. You know, we're trying not to eat cat food over the long term over there. And, that's something that's kind of like joking, but at the same time, dead serious. And that's something that I think we're at that breaking point in the marketplace where you better recognize if you don't know precisely what your risk is, what are you going to do if the S&Ps, and that's the S&P 500 or the Dow, sell off 15, 20% in a matter of days? You realize the market hasn't even moved. Nobody knows what the future holds out there. Everybody sees the risk, but nobody knows what it holds. At least define your risk in some kind of a trade over there, And this is what it's about. It's about using effective skills. Now, here, this is recent in-out spread examples. I'll go into the trading account and I'll display to you a few like recent trades in here. In fact, here. First of all, this is my monitor tab. Okay, what is the monitor tab? It's P&L. Every one of these positions is real. All right, when I say it's real, here, I only have $74,000 of buying power left. Okay, I typically keep about $300,000 in my account. That P&L is today. I'm not telling anybody, they're going to make $3-4 grand in a day. No, it's my P&L today. But when I say you want to look at different trades, I don't think I've done anything in Starbucks recently over the last like 200 days. Nothing in Starbucks. But here, I've done some stuff in Amazon. Everything I've done in Amazon, okay, for the last, this is kind of confusing, for the last 200 days in Amazon. I haven't done a lot. These are in-out spreads. Okay, you want to see real results? Well, first of all, this is just a little stock trade. Look. Okay, I sold it, I bought it. This is an in-out spread. I paid $1.21. Right here, I sold it for what? $1.92. Not huge profitability, but I defined my risk. It's Amazon. It's an $820 stock. You know what my risk is? $1.21 on it. That's why I say, again, I get nuts about this stuff because, listen, people are risking $820 a share. I have $2.38 of risk, and then I turned around and sold it for $3.40. Okay, that's just two examples. I want to make something really clear on this too. Amazon. What has Amazon done? Anybody? What has Amazon done over the last what? Okay, Amazon. What has it done? I don't know. Over the last 200 days. 200 days. Up, 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 up. I want to be really clear. This right here, the stock trade was bearish. This was bearish. This was a bearish put spread. I bought a bearish put spread. And then I sold the bearish put spread. I made money. I bought a bearish put spread. I sold a bearish put spread. I don't care. You want to look at the time? Look at the time. All right. I did this one on what? September 28th. I sold it on the 17th. Go look at a chart. Here's Amazon. Done nothing but go up. Okay. Here was that one. Right. What? I put this on. Okay. On what? The 29th? Did I say the 29th? Let's go back and look. I put it on the 28th and got out of it on the 17th. Here is the 28th, right here. Right there is the 28th. Okay, big up move. I took it off on September 17th. Did we move down? Negligibly so. Do you realize if you had a stop order, I was short in this position. Stock exploded higher. I did everything I could have and been wrong. I still actually made money on it. I've done nothing, okay, but bearish positions on Amazon and made money. No, maybe not Amazon. Here's another fun one. I've actually been trading Bank of America. Okay, I trade some size in Bank of America, but here's actually a spread. This is dirt cheap too. Look, I paid 50 cents for the thing. I sold it for 78 cents. I made money. It happened to also be a bearish put spread. Then I went out and did the same thing again. I liked it so much I got out of it in May. I got back into it in August. So in August, I bought the same spread for 50 cents. I got out of it at 73 cents. Both bearish trades. Why do I show you both bearish trades? Because if you look at Bank of America, did nothing but go up. Didn't I tell you? Okay. I got to just point this out again. You think its direction is everything. Everybody spends all this time on charts. You should buy the latest, greatest indicator. If you have an indicator that you like, I'll share it with you. I don't care. If there's an indicator that you know of, I need this, the MACD, the Fibonacci, the Bollinger Band. I don't care if it's custom script, right? We've got people that write scripts too. And our guys write all kinds of crazy scripts out there. You want an indicator? We just give them to you. And the reason we do that is because this doesn't make you money. The strategy, the logic, that's what really makes people money in this business. And by the way, if you want to see like a live trade right now, and we were talking a minute ago about Microsoft. Okay, Microsoft. It's already through its earnings. The stock is trading at $61. If you want to be bullish, could you do a bullish trade right now on it? Of course. The bullish trade, I could do the 60. Okay, I could do the 60, maybe 62 spread. All right, there's a $2 wide spread trading for just over $1. But maybe you don't want to be bullish. All right, this is recorded, so don't panic. Don't write everything down over here. Maybe I do the 62, 60 spread. That's the bearish spread. I like bearish. Bearish is nice. All right, I already have a bearish position on Microsoft. I make no two ways about it. Okay, Microsoft, come on! It's a stock that I love to hate. There's nothing like loving to hate a particular product over there. I'm on Windows. Don't crash. Don't crash. And if you live in Seattle, I'm sorry. Well, I'm not sorry you live in Seattle. Seattle's beautiful. I'm sorry if you work for Microsoft. Got to take shots where I can. By the way, I'm on a PC right now, although I am wearing my Mac-issued underwear. Hopefully my iPhone 7 doesn't explode in flames like you Samsung people. I cannot, again, stress enough. However, after you see me do these spreads, this is what you have to know. You got to know, number one, what stocks to trade this on. Why do you think earlier I came out firing at somebody about, number one, Priceline? Yuck. I don't like Priceline because the bid offer spreads. I came out firing at somebody about Intuitive Surgical. I would rather you be upset at me, but you never trade that product again. Like, don't take what I'm saying the wrong way, right? Meaning I'm just out here to try to help people. Okay, TheoTrade is very, very different than a lot of other educational firms. Like I'm going to say, the buck stops here. We put together TheoTrade to put an end to a lot of what goes on in the education business, and that's they just sell stuff and sell stuff and sell stuff and sell stuff. And again, we're about helping everybody. What stocks to do this on? How do I determine whether I'm bullish or bearish? It's about trading. It's not about the next latest, greatest indicator out there, because that stuff, it's worthless. Right? There's 470 different indicators just on thinkorswim. Can you imagine the indicators on thinkorswim and in TradeStation and Charles Schwab and all the other brokerage firms out there? Okay, there's thousands of them. You know what they're worth? Okay, what? Okay, basically the code they're basically coded on. That's it. What you got to know about trading, it's this. What stocks do I do this on? How do I determine if to be bullish or bearish? There are statistical means. Not just technical analysis, the statistical means determine whether you're bullish or bearish. What expiration do I select? What strikes do I use? Position size. How much do I risk? Depending upon how much the account is. What's the correct probability for the trade? How do I execute the trade? Like literally, you have to hit confirm and send. When do I exit? What to do on a losing position? That's what we do at TheoTrade. It's criteria. We'll give you every single strategy. You want to know what a butterfly is? I'll teach you what a butterfly is. You want to know what an in-out spread is? I'll teach you what an in-out spread is. You want to know iron condors? We do it all. But we do it with criteria. Trading, it's all about answering the what ifs. And literally, people spend tens of thousands of dollars to educate themselves. But it all comes back to people lack the basic foundation and understanding of the markets. Even, again, with the best technical analysis software out there, as I say, you can be right and you can still lose money. All right? You want to know the essential skills all traders, need for consistency and success. That's, again, we have the answers. We have answers to trade-related questions. We build recipes. And again, do not let in, the options word. Every time I come up with options, some people are just, I never want to trade options. I'm going to tell you right now. We talk about options. Okay? You can use options. But we've got, for instance, Tony Rago. He trades nothing but futures. We've got Jeff Bierman. Jeff Bierman, guess what? He's a stock guy. He understands options, though. And the reason he has to understand options, because the options market puts a price tag on those risks and helps you manage the risks. Even if you don't actually trade them, you still have to have some understanding of options out there. The secret, it's all in the sauce. Again, everybody can go out. You can go on the internet right now and you can Google what is a spread. It's going to give you 1,000 different answers over there. The following strategy is nothing. It's all about the corresponding criteria. And that requires the utmost attention to detail. So for instance, like the in-out spread, we spent months fine-tuning all of the trade setup and criteria. I mean, it's all about following steps. It's a recipe. And you go out there and you want to bake a cake. What do you have to do? You got to follow, a good baking a cake. What is it going to be? 7-8 steps to be able to bake a cake after you've done it enough times, like going through a checklist over there. Trading becomes the same thing. That's what I was trying to point out earlier with these different trading firms. If you want criteria and build an in-out spread, can you do an in-out spread in your IRA? Absolutely. You can do these spreads in IRAs. You just have to have the right brokerage firm. I have limited capital. Can I do the spreads? Now, here's a rule. All right. So number one, can you do these in an IRA? Absolutely. Check. I have limited capital. Can I do these spreads? You got to have $2K. And that's true of any brokerage firm. You have to have a minimum of $2,000. We can help you get options approval, okay, if you've got limited capital, but you do have to have north of $2,000 in the account to be able to trade spreads. I'm very forthright with that. It happens to be, all right, FINRA regulation. What if the stock sells off big? What if the stock rallies massively? Well, I can answer all of those questions over here. Do I have to monitor these trades every day? Absolutely no. You can actually use what's called a GTC. You know what GTC stands for? Good till canceled. Put the trade on, set an exit price, and allow the trade to run itself. What's the correct return for the strategy? Ooh, I know. I'm going to give this to you. It's 55 to 65%. That's actually the correct return for this strategy. That actually hones in exactly where you need to be with your GTC order. If that stuff's confusing, it's all right. I mean, that's what we do. We basically build what we call essential skills for consistency in trading. So in the last 45 minutes, all I did is expose the value behind an essential, and a foundation skill set and how, again, valuable that can be. Well, what do you think we can do in a couple hours of time? And 18 years in the business and 15 years of watching order flow. Watching order flow means I'm watching people's trades. I put together a course. It's all about the single most essential skill set traders and investors need for success in the markets. Okay. The class is coming up. It's Saturday, October 29th. That's this Saturday. It's 9 to 12. Essential skills for consistency in trading. Now, I happen to be the trade instructor for this. The class is archived immediately. It's available indefinitely. All the PowerPoints, all the criteria are available. Okay. However, this is just a class on essential skills for consistency in trading. In addition to it, we are giving Options 101 because, as I said, everything you do, has to build to a foundation, right? Options 101, it's called the basics and beyond. If you know nothing, in fact, I don't even care if you know everything there is to know about options. Please, okay, I'm imploring you, watch 101 because it looks at the options market, not because you have to learn to trade options. It looks at everything from a probability standpoint, okay? After that, Options 201. Now, I know this sounds painful to go through. Start it. Start it tonight, okay? Verticals and calendar essentials. All that this is doing is giving you the foundation skills that you need. And even if you know your options, I'm telling you, watch Options 101 on Options 201. It's going to be huge for you. All of these are included in addition to this Saturday's class. Now, here's what I was just talking about a moment ago. Bonus number 3. Okay? This is a mid-duration. Remember we were talking about earlier? You could do intraday trading, you could do mid-duration, and you could do what's called duration. So in putting together, right, this particular class this Saturday, I wanted to add other classes that complemented, right, the essential skills for consistency in trading. Meaning, I'm going to give you the essential skills on Saturday. You take the essential skills, okay, and you apply those to things like high probability in-out spreads course, right? So again, these classes, they're not necessarily sequential. Yes, Options 101 and Options 201, they're sequential. You want to watch 101, then 201, right? You can come to the Saturday consistency class, then you can listen, all right, to the high probability. By the way, this essential skills class, it's live, right? The high probability spread class, if you want, go to it, tonight. In addition to it, this is a class that I pretty much put like my heart and soul into, getting short and collecting income. That means this. Right now in the overall market, I don't see a lot of opportunity, if you will, to the upside. Listen, there's a lot. You don't have to agree with that statement, and that's okay. Whatever you might think about the economy, it doesn't matter. All right? I don't want to get into, the economics. It's a very, very simple calculation. The S&P is at 2,100 and change. What do you think is more likely? Do you think we're going to go up 200 points in the next year? Okay? Or do you think there's a probability that we could go down 400 points in the next year? You answer that question. I can't answer it for you. Okay? But when you look at things like that, like from a probability standpoint, you're like, yeah, we could kind of go up 200 points, but 400 points easy to the downside. We've been up for 7 years in a row. So we built a class called Getting Short and Collecting Income. This is 4 classes in addition to the essential skills. Okay, the whole thing is only $197. Why do we do that? Okay, because we can. Right? We're an extremely well-financed education firm backed by major brokerage firms out there. Right? The major brokerage firms, you know what they want? You. And they want you to go through our courses. So what do? They offset a huge amount of the cost. So we put together a lot of classes out there. We do it at an extremely reasonable price. $197, it's nothing. You have one bad trade. A lot of people lost more than $197 tonight, because Apple's earnings. Go to TheoTrade.com/skill. Now, again, all 5 classes are included. You get access tonight. You start going through the 101 tonight. But here's a little bit about the essential skills for consistency in trading. This is the curriculum for the upcoming class. It's about trade logic, how to use the right trade logic. When entry and exit criteria is the key to consistent returns. You're never going to be guessing what to trade. How to identify and correct flaws in your trading strategy. Okay. Another huge area of this class, it's going to be about expected moves. All right. Identify and use market expectations so you gain edge in the business over there. And how, again, even if you don't want to trade options, I keep stating that because I'm going to use options to help price our risk. Even if you're an options newbie, though, all right, to actually price option markets give you a price tag on risk to the future. And you can actually understand market risks. You can minimize losses and maximize profit potential. So this class, it's an essential skill set, as I said, transcends market condition out there. And go to TheoTrade.com/skill. Or, and by the way, the whole class is $197. And you're not going to go wrong for $197 because it includes all the bonuses out there as well. Now, in addition to it, you can access every class we have ever done and access every class we will do for the next year. First of all, when I say we do, I am one of the instructors here at TheoTrade. We have Doc Severson, Tony Rago, Jeff Bierman, okay, Slim Miller, again, myself, all are instructors. You know, a lot of like different education firms are like, ooh, come see such and such live. But that's the only person they have. All right. I tried to put together what I would call like, I don't like that whole like guru trading thing. Put together some low-key, hardcore traders. And nobody ever heard of Tony Rago before we basically pulled him up. You want to know why? He was a client of TD Ameritrade Thinkorswim for years. I watched the guy trade. I emailed him back and forth. The moment I actually left there, one of the first guys I got on the phone with, I'm like, dude, you've been killing it for years. What the hell do you do? I knew exactly what he did because became a buddy over years. So what do we do? Put him on the staff. Jeff Bierman worked with me for 7 years. Doc Severson. Okay, we actually go back to some of the same education way back when. Right? Again, it's about building the right team, the right skill set. We actually have $1,000. It's $997 of 1 year of everything we do. We call it, it's what we call total Theo. Explain it. Okay. It includes the classes that we just talked about. All 5 classes. It also includes Options 301. It includes Guide to Selling High Probability Spreads. This is selling spreads. There's a class called Surviving Extreme Volatility. There's a class called Iron Condors for you and me. Iron up! My mantra, Selling Premium and Managing Risk. The most hardcore options class you will ever go to. What I'm trying to make very clear to you, every class we have done to this point and every class we will do for the next year is included, all right, for $997. Most places they'll charge you $1,000 per class. You go once a month. It's ridiculous. Everything we've ever done, okay? Plus, we do a minimum of a class a month. Lately, we've been doing close to 2, even sometimes 3 classes a month. Small account options trading workshop. The top 10 skills for growing a small account. These are Doc Severson classes. Increasing vertical spread probabilities with technical analysis. Again, Doc Severson. Fractal energy, Doc Severson. Weekly options, that's me. Covered calls, that's me. All right. These are all classes that we already have ready to go for you. In fact, here, I'll show you a little bit about it if you're curious what the site looks like. And I'll go through a little bit about what TheoTrade does. This is our members archive. These are all the classes, okay, that we currently have ready for you to go. You know, if you want to basically say tonight, log in tonight. Go to the Options 101 class. You're like, nah, I'm beyond 101. Good. You want to see if you're beyond 101? Go to Sell Premium and Manage Risk. You want to find out? This will separate the women, the men, and the children over here because this class is as hardcore as it gets. Doesn't get any more hardcore to this. The client position conundrum. All of the criteria is in here, right? And I'm telling you right now, this class, by the way, the first portion of it is 1 hour and 25 minutes. And if you're looking at this right now and you're thinking to yourself, this is really overwhelming. Yeah, would you rather be overwhelmed or underwhelmed? You can pay $1,000. You'd rather be overwhelmed. Okay? I mean, you're going to, the next big short. This is the Risk Twist class. So we did the Risk Twist class late September. It's called the RTS spread. We do a class, if you want to be on Thinkorswim, we've got a class on Thinkorswim. Why? Because people want to know how to use the Analyze tab. We've got indicators on here. Do you want them? Because it's included. Everything that you're seeing is part, okay, of what we do at TheoTrade. In addition, and I'll show you this in a minute, in addition, we email you out trades, trade ideas. When we do a trade, we did a multitude of trades today. When we do a trade, we email it out. Then we track the trade in what do you call? A TheoTrade tracker. Now, it's the most simple spreadsheet known to mankind. Here's all the open positions and closed positions that we've done. It's all in here, okay? Then you can look at all the closed trades. You can look at P&L. Well, we don't care. It's part of it, right? All of these are trades that we have opened. In fact, if you look today, well, we bought a vertical spread in the Qs. We bought one of the VIX. We have an EWZ trade on, an XLE trade on. The Amazon trade is closed profitably, right? These are all positions that we have done recently. You can see kind of the numbers of trades that we do in the most simple spreadsheet. People talk about different indicators. You want indicators? We got them. How do we do that? We share codes with you. So there's no cost for any of this stuff. It's part of TheoTrade. You come in here, you want codes? We got them. These are all the different codes, all the different studies, okay? There's different Excel files. It's all downloadable, right? There's video links, how to build a TradeStation scan. I don't have TradeStation. Yeah, but Doc does, okay? All of these are codes that normally you would pay thousands of bucks for each one of them. It's all proprietary stuff. And by the way, there's no sacred cow here. Somebody said spend a minute on futures. Well, Tony Rago, all he does is talk about futures. He does an hour a day. Speaking of which, in addition to all the indicators, in addition to emailing you out trades, in addition to there's Doc archives and Jeff Bierman archives and Steve Miller archives, okay? I've got an archive in here. My archive is just part of the coaching sessions. Every single day, we do a minimum of 1 hour of coaching. If you want to see what a coaching session looks like, here, I'll click on February. All right, what did we do in February? So scroll back. All right, here, controlling your volatility risk and building the right trade, extreme options activity, order execution, okay? Blowing the myths out of the water. I like that one. The Greeks. If you want to know options, Greeks. Good, right? Technical analysis and times frames. All of this. And again, we're going all the way back right now to like February. You want to get more intense over here? You come to the more recent. September. Come to September. PSAR. Okay? Fixed ratio money management. If there's a topic that you want to know, I will put any amount of money. It's already been done in here. And if it's not, we'll do it. Okay? There's constant sessions going on. And we even have a calendar of all the different events. We broadcast, okay, 4 to 5 hours a day. Now, do you have to be in here 4 to 5 hours a day? No. You don't have to be in here 4 or 5 hours a day. If you want to be, great. If you don't, just come to the classes. Get the emails of the trades out to you. Okay? Again, I'll show you a little bit about what is we call Total Theo. And again, the whole thing is $1,000, right? It's $997 for everything we just talked about. And if you're overwhelmed with it, well, look, it's again, here's the site. So I want to make sure everybody actually has the site, theotrade.com/skill. Now, the class that's coming up this Saturday, there's good classes we do, and then there's critical classes. This to me is a more critical class. This is a class I wanted to do. This isn't a class, hey, I want to do an iron condor. Forget about all that. You need essential skills to have consistency. It's a foundation-based class, right? So if you just want to go to the class, that's fine. It's $197. But with that class comes 4 other classes. The 101, the 201, the high probability in-out spreads. The in-out spreads is awesome. And that class, $197, it's spectacular. You're really going to appreciate the in-out spreads class because, again, I feel pretty strongly about probably 2 classes here that I feel like incredibly strongly about. In-out spreads, all right, and the sell premium class. The next class I'm going to feel pretty strongly about, you can see all the classes we have here. This essential skills for consistency. It's a much more conceptual class, but I'm telling you, you're not going to be able to live without that one after you see it. The Total Theo, it's 12 months. It's a mentorship, but also, by the way, you have email access to us. I answer, 20, 30 emails a day from just our clients. we've got, a few thousand clients out there. If you got questions, you can chat in over here. But here's all the different classes. Now, I already went through the next big short and the weekly options and the covered calls class. The survive and thrive in extreme volatility, which is coming. All right. Sell premium and minimize risk. Again, kind of my mantra out there. The fractal energy class, if you're into technical analysis. But in addition, you get every class that we're going to do for the next year. We're going to talk about cash secured puts. Guess what? I did that last Wednesday. I already did the class. It's in the can. Meaning we called it a coaching session, but it's one of the classes. Calendar spreads, futures. No matter what you want to know, if we don't have an instructor for it, okay, we'll get an instructor for it. Pairs trading. I am a pairs trader. I will talk about pairs trading. My day trading skill, though, probably not as good as Tony Rago, so he'll be doing that class. Technical analysis, Doc and Jeff Bierman. Butterflies, that one's me. I'm an options super geek, all right? All of this, the live trading chat room. By the way, we trade live in the room every single day. All the archives, all the trade ideas, all the scans and studies, it's all part of what we do here at TheoTrade. So I'm going to answer a couple of questions, and I want to make sure to leave this up here. And again, I can tell you right now, you can go and download it and start looking through the classes tonight. That's the cool thing about this. So you got like a little bit of a taste of what we do tonight, but I'm a little bit hesitant out there. Good, you should be. This stuff is totally overwhelming. But that's what we're going to do, is not just throw one class your way, because that doesn't do any good, right? Literally, it doesn't do any good to have like one class thrown your way. We're going to throw a lot of classes your way to make sure that you really understand this stuff. It benefits you, okay? It benefits us. We want to keep you as a client here forever. People, there's one question that came in here. They said, if I sign up for $9.97 for a year, okay, will that still be good a year from now? Meaning, like, if you sign up now for a year from now, can you pay $9.97 for the next year? Yes, absolutely. Okay, so that's important, that it's a special that we put on for tonight. But a year from now, we will give you the chance to renew if you want to do that, for a year. Okay, and as somebody said, repetition. It is. That's why, again, we'd rather overwhelm you. I don't like the idea of, and by the way, please don't get me wrong here. Come to the class for $197. Check it out if you're not sure, right? But I don't like the idea of, once a month we do a class, minimum once a month. So you're going to pay $197, $197. Before you know it, listen, it's $1,000 easy. And that's why we offer Total Theo. Just, people want to do everything. By the way, yes, we accept PayPal in here too. So somebody asked about PayPal. I'm reading back a little bit. Great question. If you don't understand something in the curriculum, can you get help with either thinkorswim, a calendar spread? All right. And the answer is, we give immediate answers in the chat room. So during the course of a trading day and during the course of a class, we'll have multiple traders. Again, we don't use quote unquote support staff. Like tonight, if you guys didn't know this, tonight, if you ask a question, who's answering the questions? Either myself or Doc Severson. Doc's one of our other instructors. Again, we don't have anybody that's like, oh, I'm above this. I cannot answer questions in a chat room. Listen, we want to be involved. We want to help people. So it's in the best interest. Go for it. By the way, if you need to email or phone support, it's right on the screen over there. Or here you go. Email support@theotrade.com. Phone support. And by the way, my personal email is support@theotrade.com. That goes to all of us, right? It goes to all of us. It goes to Doc. It goes to myself. It goes to Tony. All right. We just allocate out. It goes to Jeff, Bierman. We just allocate out the emails as the day goes on. And when it comes to, instructors here, again, we'll put these guys up against anybody in this industry. One of the things I feel pretty strongly about when we're building TheoTrade is, hey, let's have a group that is, strong in each and every area of trading. And everybody kind of has their unique specialty, but I also felt it is extremely important that a few of us, okay, have institutional experience, right? Professional trading experience, backgrounds, brokerage firm background, so we don't just understand, okay, we understand the market making side of the business as well. So, all right, so in the $197 package, did you get all the courses? All right, in the $197 package, the courses that you get are the essential skills. You get options 101, options 201, in-out spreads, and guide to getting short. So there are 5 classes for the $197. Every class that we have done to this point and every class that we're gonna do, all right, for the next year is included for $997. Again, yes, you can do this inside of an IRA, 401ks, okay. Yeah, we've got plenty of futures trading again going on over there. Oh yeah, if you do need help on thinkorswim, we do have help on thinkorswim. We also have help on a bunch of other trading applications. So, but I make no two ways about this. We here at TheoTrade do refer clients to TD Ameritrade. Okay, it's not necessarily a bias. As we refer clients to TD Ameritrade, and I make this known, we have a marketing agreement in place with them. They help substantially offset the cost of your education. Right? You do not have to be a client of TD Ameritrade. And the reason I say that is somebody, might be joining us from, somebody said Sweden earlier. You can't be a client of TD Ameritrade. Don't worry about it. Okay? We have enough clients of TD Ameritrade that they're happy, we're happy, you'll be happy no matter what brokerage firm you're with. All right? We also do, for total Theo members, have a unique commission schedule for you. With that, I'm going to say good evening to you. You can always, again, review this. You can email us. You ever need to get a hold of us. Again, tonight, this is TheoTrade.com/skill. That's for this evening's special over here. Sign up. Check out some of the archives tonight, tomorrow. Hop in the chat room tomorrow morning. Say hello. Say, hey, I'm brand new. I start. If you're available in the morning, I start, okay, 10 minutes prior to market open. So if it's Central Time, it's 8:22 on the button. I'll be live in our chat room. With that, thanks everybody for joining us tonight. And again, welcome to TheoTrade. Have a great evening. Bye-bye.